Hello, I'm Tim Beggins, president of Elk Trading Company, and this is the top news for natural gas. Number one, JERA has signed four 20-year deals for LNG importation. Number two, India natural gas demand is going to grow by 8% through 2030 under its good to go scenario. Number three, Venture Global has withdrawn the Delta LNG project. And number four, the U.S. rig count has dropped for the seventh straight week. Let's turn to the spot July natural gas contract. We're currently trading at 369.5, up 11.4 cents or over 3%. This contract expires next Thursday, the 26th. And we're really basically stuck in a sideways pattern here, as you can see, for the last month. Prices are up today, but we're still well contained in this 344.5 basically to 380 trading range. Let's take a look at the hourly chart and let's drop in our pivot points so we can see what's going on for today. As you can see here, we are above the daily pivot at 356.80. We're well above that. The first resistance was 360. And right now we are currently at that next resistance level, which is 369.20. So we're right there. Above this, the market will have resistance at 376, which was the high we hit overnight on that first bar for the hourly chart. The RSI is still positive above the 50 level, and this means that we may go back and test that 376 level. But for now, it looks like we're still stuck in this range between 344.5 and 380. In the news last week was the ethane price, which was Enterprise Products was initially rejected for sending ethane cargoes to China back early in the first week of June. This may have been rescinded, but let's take a look at the ethane price. This is the Mount Belvieu ethane price for July. As you can see right now, we're currently about 23 cents. And so how do we find what is the equivalent between what is ethane recovery and what is ethane rejection? Well, we take the price of ethane right here at 23 cents, we divide it by 66,500, and then multiply that by 1 million. And that gives us an equivalent right now for natural gas of about 24.5 cents for the break even at 368. We're below that again at 23 cents for Mount Belvieu for July. We recently hit that 20-cent low back in September and November on that news of the Enterprise Products rejection of those cargoes to China, but we have since recovered. But we are still in ethane rejection mode, which means there's probably about 1.5 BCF a day more in the natural gas supply overall. Let's take a look at the front to back spreads and look what's happened here between January and July. It has come off after it hit our 135, 140 target area and is now testing that trend line. The RSI still remains above 50, which is positive, but a break and close below this trend line means that the move is probably over. And let's take a look at the Jan versus October. Again, getting up to our 120 target, the same thing here, has not quite reached the trend line yet, but it looks like it's undergoing some profit taking. And let's take a look at what happened in the natural gas storage for last week. It was an injection of 109. Now we're at 2.707 TCF in the ground. This is comparable to some similar years where we got up to about 3.9.5 as far as TCF in storage before the winter the winter withdrawal season. What else happened? The rig count. The rig count was down 4, and this is 1 rig down for gas and 3 down for oil. As you can see, the rig count for gas is still above last year. We're 15 rigs above last year, but for oil, it's the opposite, down 49. And this is all basically in the Permian region, down 36, with a little bit down in the Eagle Ford region. So that means that we're going to start losing some associated natural gas. And let's take a look at the temperature outlook. It's above normal for the East Coast, and this is the mid-Atlantic states down to the South Carolina, with near normal temperatures out west. And what else has happened? It's rain. This is the rain from the 6th all the way through the 6th, the 9th of June, all the way through the 16th. That's the last week. And it has been very, very heavy here in East Texas and the parts of Louisiana, all the way back to the Carolinas, between 4 and 8 inches of rain. We need this to slow down because that will help us finally dry out the atmosphere. So, looking at the tropics right now, quiet. Why? Well, we've got the Saharan dust coming in, and there's another wave behind it. This is going to inhibit any hurricane activity in the mid Atlantic. So, if we're going to get something, it's going to have to be out of the Gulf of America slash Mexico, somewhere around Panama or around the Belize area. But right now, the mid Atlantic is just going to be inhibited. And let's take a look at the forecast for the long range here from NOAA. This is saying that we are again looking at a higher forecast for a neutral year going into winter. So we're in neutral right now. It continues to stay that way all the way through. And what else does that mean for winter? That means it's going to be cold in the northern parts of the country, and it's going to be warm along the southern tier, but also wet across parts of East Texas through the Carolinas. Sound familiar? It is. It looks just like the drought monitor, which is we've got a drought in parts of South Florida and of course in south and western parts of Texas, especially around San Antonio. That's the Eagleford area, all the way back through California. What else is going on? Well, we've got a swarm of small earthquakes around the Delaware Basin. This is in New Mexico and parts of Texas. These are small earthquakes, really just 1.5 all the way back up toward 3. So we've got to keep a careful eye on this. This means potentially that saltwater disposal wells are overpressurizing certain zones. This may curtail those injections, which may also dial back oil production in this basin. Let's take a look at our stocks. Our stocks for this year, for the oil and gas E&P sector, this is market cap between $2 and $10 billion and a short float over 10%. They're doing well. The natural gas stocks are up today. That's CNX Resources and Comstock Resources. They're positive. The ones that are more heavily weighted toward crude oil are down. But how did they do for the week? Excuse me, that's the 1 month performance, but let's take a look at the weekly performance. The weekly performance was fantastic, with Apache up 9.2% and Civitas Resources up 8.72. So the stocks that were lagging, again, CNX, which is 2.75. This is Marcellus Producer. So again, they're doing well. They have a short float that's over 10%. So anytime natural gas prices and crude oil prices move higher, they're going to have some rocket fuel. So again, just looking here at the recap for July, we're currently trading at 368.80, up 10.7 cents or 3.3%. So let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.